Hey everybody, what's going on? Fabian for Liberty, fabianforliberty.com is my website. I want to remind everyone this Wednesday, free webinar, 4 p.m. on real estate investing, the 4 new rules of real estate investing, and also debunking some current myths. Now in this video, I'm going to talk about the market collapse, right? The economic collapse. And an interesting article that came out in Bloomberg on Friday, I believe, I'll post that article down below, that really speaks to exactly what I've been talking about, why this time around, or at least what we've seen over the last couple of weeks in the stock market, in oil prices, does not signal that the collapse is imminent. Now, I do believe the collapse is going to happen. As many of you know, I've talked about it now for several years. But as I've always said, I can sit here since 2008 and I can talk about a market collapse, the economy is going to collapse, and eventually I'm going to be right. But that's not good enough for me, and in the line of business that I'm in, I want to have a better idea as far as better timing. You can never time a market, but certainly you can look at different indicators. And I think one of the biggest indicators right now are central banks colluding together, and I'm going to break that down here in just a minute. Also, real quick, want to give a shout out to one of my old employers. Actually, he's the last employer I had before I was fired from that job and a string of jobs that I had been fired, 6 jobs in I believe about a year and a half. And Scott Mitchell, I really appreciate the fact that you fired me. I know you're a solid, good guy, and the truth is that actually propelled me. The fact that I was unemployable in my early 20s propelled me to get into real estate, to become an entrepreneur, and to really understand the job paradigm just was not for me. I couldn't work for somebody else. And if you're watching these videos, hopefully that's kind of resonated with you on some level. So anyways, just wanted to say that. Also, down below, there's also a link to my recent interview with Crush the Street, crushthestreet.com, great website. They put out great information. It's about a 20-minute video. We covered the New World Order, cover different reasons of why this economic collapse is going down, and what to look out for. Okay, so the biggest thing that I think is overlooked by people that recognize that an economic collapse is imminent, or that is going to happen, is the collusion of central banks. This article from Bloomberg was talking about how the market recovery last week, when the market was up a couple of percentage points, was the biggest recovery, the biggest rally stocks had seen since I think like 2011, 2012. And the market was down a little bit today. I don't really care what the market does on a day-to-day basis. It really doesn't matter. But what I found interesting about this article is that the reason the market went up that day was because central banks around the world are beginning to talk yet again of more stimulus. And I believe, look, with the high-frequency traders that make up a majority of the market, they love the news of central banks coming together to print more money, or to create more easing, or to create more stimulus on whatever level, because they make more money. To build a stock market, for stock prices to go up, you need an improving economy, which some would argue, yes, it's improving in some areas, no, it's not. I would side on the latter, thinking that most of it has been smoke and mirrors, that the economy isn't really getting any better. It's just been the credit that's been expanded. The other component you need for a rising stock market is expanding credit, and that's the sole purpose we've seen stocks globally go up. It's why we see them go up in China, and now why we see them plummet in China, because of fears that China, the largest acquirer of global debt, has some serious problems, and it does. I believe they're going to enter another Great Depression, or a Great Depression similar to the Great Depression of the United States in the 1930s, but they will emerge because of their concept and idea that the elites love of state capitalism. They will emerge as the new global engine of growth, to quote George Soros. I still think that we have, everyone thinks, like I've talked about this before on my podcast, which by the way, I'm starting back up here this week, that everyone says zero hedge, all these other people, that the Federal Reserve and central banks have run out of options. They've run out of ammunition, but that's not true. The truth is that they may have overplayed several of the only solutions they have in their little bag of tricks, but they haven't really pulled out the big guns. So they've gone from maybe using, a 50 cal, where now they're going to go to use a Hellfire missile or a bunker buster missile, to put it kind of in military context, if you will. They can do global quantitative easing, which I think will be the last step before a major devaluation, a major currency collapse, where you have banks around the world coming together, central banks around the world coming together for a major global stimulus plan to avert what they will deem as an international crisis that's going to basically make everybody homeless and we're all going to die in the streets a horrible death, which is typically how they phrase these things. So they still have more things. I mean, quantitative easing number 4 could very well be unleashed. That would see the markets rebound. Negative interest rates, Janet Yellen's already on record talking about this. So look, a couple of weeks in the down market, which I find so interesting, the market goes down 500 points. It's all over the news, all over alternative media, all over Drudge, all over everywhere. And then it recoups and it's up, 2%, and you don't hear that anywhere. It's because the bottom line is day to day of a market doesn't matter. You have to look at what the central banks are doing, what they're talking about at their quarterly meetings. And what they're talking about has been pretty clear. They're still leaving the door open for not only negative interest rates, more stimulus, more debasing of the currency. All those options are still on the table at the first sign of the economy not doing well. And the economy is not doing well overall. Now, certainly they're going to blame it on this storm that we have, or they'll blame it on international tensions, and some of that certainly is a viable solution or a viable explanation. The Iran-Saudi thing that's going on, big story, not really being covered. But the bottom line is, I believe no economic collapse until the end of this year or 2017. We're going to continue in this downward spiral where we still may see, though, stock prices, commodity prices rise, oil even rebound because of concentrated efforts by the global banks to keep up the fraud, keep up the smoke and mirrors. That's what I believe is going to happen. So I'm Fabian for Liberty. Tomorrow I'm going to talk about oil prices because oil prices are a big thing. A lot of things going on in the Middle East. Are the elites so desperate they'll start a war in the Middle East to really make the price of oil go back to over $100? That's an interesting topic. I'd love to hear your feedback on this video. Again, free webinar tomorrow at 4 p.m. Pacific time. The registration link is down below. Also check out the video interview that I did with Crush the Street, or that Crush the Street did with me. Great video. That link is down below as well. Thanks for watching. I'm out.